welcome to the Trading Market Technicals Morning Call video for Wednesday, February 27th. Well, we did get a follow-through day to the upside, and that's basically due to Bernanke's comments defending the asset buying purchase program. So we did not get Bernanke speaking, stating that we're probably looking to end QE anytime soon. He reaffirmed it and said that that bond buying outweighs any risk right now. So markets liked what he said, and the markets did rally. Dow up 132, S&P up 10, Nasdaq up 17. Gold actually had a big turnaround early in the morning, and gold ended up actually up $23. So we had a nice big down day on Monday. We did manage to get a small little bounce on the Bernanke comments, and now we're really going to see how this latest sell-off is going to be. If the next rally can find lower tops, and we make lower tops, and then we quickly reverse to really take out some of the lows, then it's just going to reaffirm that the bears are actually stepping in and in control, and we actually have a tradable top. Now, as far as day traders concerned, that really is not going to be too much of a concern. You want to know where you have an idea where the markets are headed during the day. And clear example yesterday when we mentioned on yesterday's video that we're probably due for some sort of a bounce, and the reason being was copper was at its lower trend line, which I'll show you. The McClellan oscillator closed outside of its Bollinger Band, as well as the VIX closed outside of its Bollinger Band. So we were a bit stretched for the one day down. So some sort of a bounce was really in the cards, and it looks like when you're starting a sentiment shift, which we're getting right now, you have bulls and bears kind of fighting for that control, and you'll see up days, down days, volatility start to pick up when you're at tops and or bottoms. So when you do see that, that's a big flag to say, okay, maybe we just might be topping here. Now, and that doesn't mean that we can't go higher today, but it's just for the longer term guys, position swing traders, you have to be careful. I wouldn't be looking to buy or add to your positions at these areas. Anywhere below the 1450, 60 area would be probably a safe buy-in. And if you're wrong, you're wrong. But you're not, you're not buying in here at 1500, where the markets go, another 20 points and then really start to sell off, and we start making lower lows here. So that's really what I'm looking for now. I'm going to see and get my cue from any rallies that happen. And if the rallies are shallow, weak, and we fail and we make lower lows off the top, then I'm going to start looking to really get aggressive here to the short side. Until then, I'm just still looking for the best setups, and look, I'll trade them lower, I'll trade them higher. The bottom line is that we want to preserve capital and wait until really the markets start to really become really easy. Right now, the markets are flip-flopping back and forth with the Italian auctions, Italian elections, and then of course with Bernanke speaking, and sentiment out there. So we just want to be a little bit more nimble and not be too thick-headed, saying, "Oh, we're headed low, I'm looking to short everything." That's not the case. So we just, take a step back, and then let's just kind of reevaluate everything, and then look to pick our spots during the day. All right. So on the econ data, we have a little bit of consumer that was yesterday. We have durable goods, transportation, transportation, of course, pending home sales, and then crude inventories today. So it'll be interesting to see what really happens here, and just kind of. Well, take it one step at a time with the numbers that are coming in, but nothing really too dynamic here. I thought Bernanke's speech would have been a little bit more intensifying for the markets, but we did get that little bit of a bounce here. And I just want to show you what we were talking about yesterday. Here's the NYMO, and I said that we closed outside the band. I wouldn't be surprised if we get some sort of a recovery bounce. And the bounce was shallow, and I'll show that to you in the charts. But as you can see here, every time we close outside the band, we get some sort of rally. But rally was kind of muted yesterday. We really didn't do too much. We opened lower, and then we just kind of caught a low midday, and then we just kind of rallied and bounced here. Copper, same thing with copper. We caught the bottom of this lower trend line of the symmetrical triangle, and now we're just kind of sitting to see which way we go next. But this was a big telltale sign here last Wednesday when I mentioned a week ago. I said, hey, copper, transports, and Russell looked weak, and copper selling off, not a real good sign. We'll see what happens tomorrow. And sure enough, we started getting that little bit of sell-off that we were looking for. Okay, now we'll take a look at the dollar. And I'm thinking, looking at some sort of a pullback here. This is just, imaginary lines looking to see if we do pull back again. And if anything, we would probably bull flag into like the 200-day moving average, or even make a higher low off this area here and then move higher and really start to accelerate. That would definitely put some big pressure on equities. But again, we did have a nice little big move up. We're overbought here. A dollar and S&P ratio chart looks fantastic. So again, pull back here into the line and rally higher. I think the next pullback will probably be bought into in the dollar, which would fuel a dollar rally and an equity sell-off, risk-off type mentality. Okay, and then let's take a look at the VIX. As you can see here, we did close outside the band really, really far. So this was a pretty frightening candle if you're a bull, and sure enough, now we rolled back in, so that created some sort of a buy signal for equities, a sell signal for the VIX. And again, guys, even if we come back again today, we rally today back into this candle here, nothing goes straight up like this. As you can see, you see what happened here, we had a big sell down, and then we just started kind of deteriorating lower. But again, that was one of my reasons why I would say look out for a little bit of some sort of a buy setup here in the markets. And then here's the volatility, put call inches. We're at 110. We closed down ever so slightly. So we do see protection being bought here, right? We see puts being bought. So people are getting a little nervous at these areas. And then lastly, let's just show you the New York new highs, new lows. And even though the markets went up, new highs, new lows actually started going lower. So keep an eye on this area here. Anything really above 100 is bullish, and we are now below that. So we start breaking this lower trend line support here. It will be interesting to see what happens. And my guess is that we rally a little bit, 15.10, right around that area, 15.13 fail, and then we really start taking out this little pivotal low, which will be a real important factor here. All right, now let's take a look at our S&P versus ATR. As you can see, our average true range is starting to increase. That means volatility is coming into the market, which we love to see. That means that we're going to be getting active real soon, if not already. And we're looking to see if this thing can continue to get a little bit of movement. And this is, as soon as we get to this bottom here and we get this low, usually volatility steps in. And you can see the sentiment shift in the markets here from being overly bullish to now bullish and slightly cautious, or optimistically, bullish. So this is something that I'm watching. And again, a lot of the indicators are still pointing lower. As you can see here in the spiders, we're rolling back down here. Now again, for the bullish case, we're unwinding our overbought reading for the last 2 months, so that is a good sign, but we'll see where price takes us. We're here at the 50-day moving average. We did break below the 20, which we're right here, and we're holding this line constructively, so and this lower trend line of this bigger rising channel. So now if we get a little bit of a pop back up in this area here, we have this reversal candle here, which is positive, but we need to take out yesterday's high to really get going. And let's see where this takes us. If we make another lower high off of here and here, then I could almost say that the top is probably in. And then the next day, if we move lower, we could actually start putting on some shorts for swing trades. And here we go, 60-minute spiders. As you can see, look at our RSI, stochastics, and MACD, all rolling over and rolling lower, making lower highs and higher, and lower highs and lower lows. So here I'm looking at 147.20 right now. As you can see here, a little bit of a thin zone, 149.80 broke and held on the close, but we did break below the main pivot, and we stayed below that. So that's a bearish implication here, as well as the 20 and 50 period and the 200 period were all above it. So not really a healthy bounce from yesterday, although we did bounce. I mean, so that's not it's nothing to shake a stick at. S&P spiders 30-minute, as you can see here, same thing, broke lower outside the band, try to retest it, and then we bounced up higher here. So we're just below the main pivot of the day. And let's take a look at our S&P cash. We are looking for 1475 first target of this move lower. We did get right above it, actually, 1496. 1494, so we just closed above the 1495 support. So let's see if we can get back up into this 1505, 1510 area, just underneath that 20-day, and then fail. You can see our CCI just fell out of bed here, commodity channel index, and then we are moving lower here. So maybe we catch a little bit of support right in this area, and then make that higher low again. So that's what we're looking for on our indicator. 60-minute S&P cash, as you can see, I put a Fibonacci from the low here, from the 31st of December 2012 to the high of 2013, and we just almost finished a 38.2% retracement. I'm still looking for a deeper pullback to probably the 1460 to 1470, maybe even lower if we overshoot, but this is where I'm looking at, right in here. This is my projected target for at least some sort of a tradable bounce, and then we would see what happens. Maybe we bounce in, we catch this little S2 area, hold for a while, chop around, and then try to regain control. The bulls regain control going into the month of maybe middle of March, April, and then we have that sell in May, go away type mentality again, and then we start to sell off going into the summer and into the early fall. That's just, again, a projection, nothing really tradable. S&P 30-minute, again, same thing. We're back up into this. We tested the lower end of this trend line, and we never quite made it. So weak bounce here, guys, weak bounce. I'd like to see a little bit more follow-through. Okay, a couple of sectors we've been talking about the last few days. The bank sector. Watch the banks, because it's going to be a big this is going to be come into play here in the coming days and weeks is the bank sector. I like JP Morgan, Morgan Stanley short. I also like the crude oil short on any failed rally attempts. So again, failed rally attempts. I'm not looking to short it on the way up. I want the rally to fail, make lower highs, lower lows, and OIH and XLE are great ETFs to look to short if you are looking to do something like that. Or you could even short a weak stock. But right now, we want to get the rally in tune, and then let's see if it fails. But look, you can see clearly our momentum indicators are starting to wane and starting to lose its upside momentum here. Okay, diamond, same thing. As you can see, real small gain, not much of anything from this large engulfing candle. I mean, it is a good sign that we held this little lower trend line here, but we're still below the 20, and we really need to get back below the 20 and really start testing the highs here. I don't think that's going to happen unless something really exciting comes out of the markets, but I really think the markets are probably putting in a tradable top, and we won't know that until the next couple of days, next few days, rally attempts and fail, and then we start to reverse, and that's when we really look to start putting on some positions short. And the Russell IWM ETF, as you can see here, big distribution days. Russell couldn't even get green, really, to be quite honest with you. Russell is really weak. That is not a good sign for risk-on type mentalities. Also, we had our risk-correlated high-yielding currencies also had weak bounces yesterday, so that's another thing to keep an eye on as well. And the transportation sector. Transports didn't even get green, as you can see here. So this is all telling us that more than likely, even if we get another rally, it'll probably be a failed rally attempt at the highs, and we'll make a lower high, and then probably look to start to roll over again. But when you get this type of volatility here, right, you want to use caution because you're not really too sure if the markets are headed lower, although you have a one-day and then a move higher like we had here, a little push, shallow pullback, and then here we thought maybe something was going on, and all of a sudden we rallied for another 6-7 days. So we want to really use caution here. And as when you see we get these large engulfing candles to the downside, you can see volatility's picking up, and that's really a cue that we might have a tradable top in place. And here's Apple. Apple did manage to move higher, and that's basically on comments from Doug Cass, Seabreeze Partners, one of the fund managers, talking about the annual meeting, which I mentioned yesterday, talking about their dividend. So, people looking to start trying to buy Apple here. And again, for a trade, absolutely. To start building a position, stay away. There's going to be plenty of opportunity below 400, I would imagine. And that's what it looks like right now. Unless Apple, in their annual meeting, says something so dynamic that you're going to want to buy it because it's going to be the cheapest, and you're not going to see it in the 450s for a while. But right now, tradable stock, look for, close to the 460, 470 area on this next bounce. So we'll see what happens on their annual meeting. Be really interesting to see. All right, lastly is the Qs, guys. Same thing here, really just chopping around So you could see that how the indicators, our momentum indicators, really give you a little bit of a sign. But the bottom line is watching what happens intraday with the Russell, the Nasdaq, and the transports. Those are really a three key, and then of course copper. And if you see divergence coming in, usually that will fall into play. It doesn't always happen, but it's always a good sign to say, hey, what's going on with these major sectors here? I need to follow, because if the Dow and S&P are followers to the three sectors, then that's going to be a real good sign that you might have, intraday market divergence, whether it be to the upside or downside, and that'd be a cue that, hey, I'm long, I better be careful, or I'm short, it looks like divergence is following suit, I'm going to stay short here, okay? So just a quick little tip. All right, guys, let's see what happens in the next couple of days. It'll be really interesting to see how we close the week. Remember, our longer-term weekly indicators, our NASI and our New York Stock Exchange Summation Index, they are both on sell signals, okay? So let's see what happens if we can get some sort of a rally for the next couple of days, and then probably lay into some shorts either at the end of the week or beginning of next week. But in the meantime, day trading, has been a little bit dried up, basically because our earnings season has dried up, and it's not too much other than, of course, just the market short. And or a buy. So that's something that I like to trade stocks a little bit more than I look to trade the indexes itself. So a lot of work to do in the interim. So we'll just keep our palates dry here. But something is definitely brewing. I do see it in the cards, and I'm really excited about the volatility starting to pick up. All right, have a great day, and we'll talk to you tomorrow. Take care, everybody.